Hello everyone, welcome back to the channel The Tax Master UAE, and I am Bhagirath Mandal, and today we are diving into a fascinating topic that could make a huge differences for the business in the UAE. Did you know that the business operating in the designated free zones can enjoy significant VAT benefits? But it's not as simple as it seems. There are some conditions that you need to fulfill to take fully advantage of it. So please stay tuned as we will break down VAT treatment in these designated free zones. So let's understand first the overview. Since UAE introduced VAT law in 2018, which will be effective from 1st January 2018, and VAT is the indirect form of tax and general consumption tax. It applies on the supply of goods and the services, which takes place within the territorial area of the UAE. Now, UAE has almost over 45 free zones in the UAE altogether, and these free zones are trade-free zone. Trade-free zone. It is also known as trade-free zones. As in India, there is SEZ, a special economic zones, which gives some relaxation to the company established in. Similar to that, UAE has free zone, which is also known as free trade zones. It is an area designed to promote the international business in the UAE by providing 100% foreign enterprise ownership. So when you establish any company in Dubai mainland or out of a free zone, then they requires UAE national as a local partner or shareholders. But in the case of free zone company, it does not require such local partners or shareholders. Also, free zone attracts various incentives such as no requirement for UAE national as local partners and the shareholders, tax exemption on duties and taxes such as corporate tax, personal income tax, and all imports and export duties. Also, the business in the free zones are required to obtain necessary license from the respective free zone authority and comply with their guidelines when operating in their when operating their business in these free zones. So here, every free zones had their one set of rules and set of rules and the authorities. So each business have to take license, required license from their respective free zone authority and follow the guidelines, follow the rules specified by them. Now let's come to understand what is designated free zone. So designated free zones is an area specified the cabinet decision and that meets the specified conditions which is um, mentioned in executive regulation of the VAT. And for the VAT purposes, these designated area are treated as being outside of the UAE, and any supply between these designated zones are treated as to be 0% VAT. It means you don't need to pay any VAT on such supply of goods and the goods between these designated zones. So let's understand what are the conditions for designated zones to qualify as designated zones. Number one is that the UAE should be within the designated zone should be within the specific fenced geographical area. So the cabinet decision has specified the fenced geographical area in the UAE, and to qualify as qualified free zone, designated free zone, that designated zone should be within that fenced geographical area only, and it should have security measures and custom controls. So when you enter any country, you can't enter directly, right? There you have there is security measures and you have to give your identity details or uh, others. Similar to that, the these zones, these designated zones should have security measures and custom control for exit or entry of individual as well as goods from and to the designated zone. When you enter there, you have your identity and they will check. When you come out, again you have to give your identity card or whatever documents they ask. So there should be security measures. And other is that they have their specified procedure, internal procedure regarding the method of keeping, storing and processing goods within the designated zone. And the operator, the business who are operating in designated zone should comply with the procedure set by their authorities. And to qualify as a designated free zone, each of above conditions need to be fulfilled. And in case if they are not fulfilling any conditions, in that case they won't be qualified as designated zone and will be treated as being inside the state, and the VAT treatment will be similar to um, other zones like mainland. It means you have to pay VAT on supply of goods and services in case they do not qualify for designated free zones. And Article 51 of the Executive Regulation of VAT specifies a special provision for designated zone. And this is especially for the supply of goods. And not one thing to note here is that this provision do not apply in case of supply of services. It means if you are supplying any services, in that case, it will be treated at par. It means normal provision will apply. That means 5% VAT will be applicable on supply of the services. Now, in case of supply of goods, let's understand first in case of purchase. Suppose company A, you can see in the screen company A inside the designated zone. Company A is in designated zone. Now they are now first transaction they are doing is company C, the supplier of good, which is inside the country but not in designated zone. It means suppose it is mainland company. So company A is purchasing goods from company C, which is in the mainland. In that case, 5% VAT will be applicable. Um, Its reason is that here for mainland company it won't be supposed to be export, right? It will be treated as normal inside the country. That's why 5% VAT is levied here. And let's come to another. Suppose designated zone is buying goods from outside of the state. It means suppose India. Let's take example. Suppose in India. In that case, since designated zone is treated as being out of UAE, so the goods purchased from India to designated zone do not enter into the territorial area of UAE. That's why they are treated as being out of scope and no VAT is levied here. Again, from designated zone to another designated zone. In that case also, the goods are not entering into designated territorial area of the UAE. That's why it is still out of scope. And again, within the same designated zone, it will be out of scope. The reason is the same. Since these goods do not enter into the territorial area of the UAE. And let's come to now in case of sales. Suppose designated zone company A selling goods to Dubai mainland or out of country or same designated zone or within the same designated zone or another designated zone. So let's come to inside the country mainland. Suppose mainland. If the company in a designated zone company supplying goods to individuals as well as the company, individual means consumption, for consumption, company means maybe for consumption or for resale for business purposes. In both cases 5% VAT will be applicable here. And the reason is same, but the here the designated zone don't need to pay VAT. The VAT will be paid on the reverse charge mechanism. It means the importer, it will be assumed, these transactions will be assumed to be import of the goods from designated zone to mainland. As since the designated zone are treated being outside of the UAE, so any purchase by mainland company from designated zone will be treated as import, and in case of import, reverse VAT is paid by the importer on reverse charge basis. Even in case of individual, suppose company B is registered for VAT, in that case they will the VAT amount will be reflected in their VAT portal, and at the time of VAT filing they will adjust, they will take the credit and adjust. And in case of individual, suppose in that case to release the goods from designated zone or custom, they have to pay VAT amount first in cash or in cash, and that then only they will the goods will be released to the individual. Now let's come to other country. Suppose company A is exporting goods to India. In that case, whether it is individuals or company, in both cases it will be out of scope, because these goods are not entering into geographical area of the UAE. Also within the same designated zone or another designated zone. In case of individual, it will be treated as being 5% because individual, in case of consumption, if it is if the goods are sold for consumption of buyer, in that case the 5% VAT will be applicable. And in case of other than consumption, like for resale, for doing business, in that case it will be still out of the scope. And if you have any queries, any doubt regarding the export or import of a designated zone, VAT treatment on supply and purchase and sale of in designated zone, and also import and export, you can please write down in the comment section. And please do like, subscribe, and share the video. Thank you so much.